Building wealth is often a slow process, especially in the beginning. And I'm convinced that this is the main reason why most people don't stick to their plans whenever they start to try to build wealth. Because you get discouraged because things aren't moving as quickly as you think that they should. And that's usually based on what we see on social media. You see, when we open up apps like Instagram, we often see people talking about how easy it is to make money, and let them tell you, everybody makes a minimum of 6 figures. Now, I believe that social media sites such as Instagram have their positive aspects to it, but I think there's more negative than positive. So in today's video, I want to focus on how easy it actually is to start building wealth. So yesterday, I dropped a video on my channel where I talked about all of the things that I wish that I knew in order to actually start building wealth. So today's video is almost like a part 2 to that video. So I'm gonna walk you through 2 scenarios, how you can start building wealth right now with no money invested, and within 5 to 10 years, you'll be in a much better position than you are in today. The investment vehicle that I often recommend to people is investing in the stock market because it has an extremely low barrier to entry and anybody can get started with as little as $5. And on top of that, you can invest in index funds such as the S&P 500, where you can kind of have a set it and forget it type vibe, and you don't actually have to watch it. You can just put money in it every week, every other week, every month, whatever cadence that you select. And over a period of time, you'll start to see some growth in your account. When I first started investing in the stock market, I didn't have a lot of financial education and I had to do a lot of research on my own. But once I got in there, it was almost addicting, right? I wanted to continue to invest and I wanted to see if I could invest more each and every month, right? So if I could invest $400 in one month, then the next month I want to try to invest at least $425 or $450. And I continued that up until I actually got to a point to where I just put a line item in my budget to where I was like, this is what I'm investing every single month, regardless of what's going on. This money is going into the account. And when I first started, I started investing in Vanguard's VOO, which basically tracks the S&P 500 index. So I'm going to be giving you 2 different scenarios in today's video. The first is someone that's going to be investing $500 a month into the S&P 500 for a period of 10 years. And the second person is going to be investing $1,000 a month into the S&P 500 over a 10-year period. Both individuals will be starting out with nothing invested. So we'll be starting at 0, and then we're going to see where we're going to be at the end of a 10-year period. Now, the reason that I selected 10 years is because I think that that will give us enough time to actually see some growth in our investment. All right, so we're going to go ahead and we're going to take a look at this. So what you're looking at right here is just a website that I found online, and I'll add a link to this website down in the description below so you can run some scenarios as well. So what we're going to do is we're going to have a starting point to where we are going to actually take a look at how our investment will grow over time. So we'll go ahead and we'll change this to 0 because that's our starting point. And we're going to take a look at what our portfolio would look like after 10 years. And the rate, we're going to change that to 10%. If you've been following the stock market, then the average return on a portfolio is between 8 to 12%. Of course, some years it may be lower than 8% and some years it may be much higher. But we're going to use 10% because it's right there in the middle. And the interest is going to be compounded annually. And we are going to add a total of $500, and we're going to do that at the end of each month. And then we're going to take a look and see how much money we'll actually have after a 10-year period. So if we invested $500 a month over a 10-year period, we would have almost $100,000 in our investment account. And $60,000 of that will be contributions that we've made over that 10-year period. And we'll have close to $40,000 in interest added to what we've actually put into our account. So if we scroll down here and we take a look here, we'll see from year 1 to year 10, adding $6,000 a year, and how much interest is being added to our account every single year, and then the ending balance for each of the years. Now, one thing to keep in mind is index funds like VOO, they pay out a dividend every single quarter. So we're not even factoring in reinvesting those dividends back into our account every single quarter. So our number that we would achieve over a 10-year period by investing $500 a month would be higher than the $100,000. Now let's run a scenario where we do $1,000 a month instead of $500 a month. All right, so we're gonna start out at zero because we haven't started investing yet, and now is gonna be the first time that we're doing this. And we're gonna do it over the same 10-year period, the same rate of return of 10%, compounded annually, and then instead of $500 in there, we're gonna change that to $1,000, and we're gonna take a look and see what that looks like. So by investing $1,000 a month, we could expect the ending balance after a 10-year period to be roughly $200,000, with $120,000 of our own money invested and about $80,000 in interest. Now again, this doesn't include any quarterly dividends that we would be paid out by investing in an index fund like VOO. We'll take a look down at the bottom here, and you can see that's $12,000 a year invested. The middle column here shows how much interest that we would receive at 10% compounded annually, and then the ending balance at the end of each year. Now, when I talk about how easy it is to actually start building wealth, I get a lot of pushback from people saying that it's not as easy as I try to make it out to be. I'm not saying that everyone's gonna have $500 a month in disposable income that they can invest in the market, or $1,000, right? But here's the thing, you don't have to start out with $1,000 or $500. You could start out with $100 a month, right? But one thing that I do know is that a lot of us have car payments that are $500 a month, $700 a month. And then you add in the car insurance, gas, maintenance. A lot of us are paying around $1,000 a month just in a vehicle. And the issue with that is we'll pay $800 to $1,000 a month for a vehicle over a 5 or a 6 year period, but we won't be able to find the money to invest in the stock market. Now, it's fine if you need a car and you pay for it over a 5-year period, but don't trade it in, right? The money that you were paying for that car payment, now put that money into the stock market. And you can put it into the S&P 500, or you can put it into a dividend index fund, or you can put it in any other type of index fund and kind of set it and forget it. And you can run the same scenarios that I ran in this calculator to see what type of returns that you would get. Now do you see why I often say that building wealth is much easier than people think? Anyone can start building wealth with $50, $100, $200 a month, and then you can go from there. The key is to get started. So is building wealth actually a lot easier than a lot of people think? I think so, but I want to hear from you. Am I missing the mark on this, or do you agree with me? Let me know down in the comment section. Thanks for watching, and I'll catch you on the next video.